Hello there. Welcome to my class. My name is Marcio de Paula, and I will be your instructor for today's lesson. Today we will be talking about QuickBooks Desktop 2020 Chapter 3. One of the best parts of being in business is creating and developing relationships with customers. After all, who doesn't enjoy receiving payment for a job well done? Intuit describes a customer as any person, business, or group that buys or pays for the services or products that your business or organization sells or provides. Therefore, when working with QuickBooks, consider a customer anyone who pays you funds. This simple definition will help if you have a unique business, such as a not-for-profit organization that doesn't usually use the term customer. The job feature is an optional aspect of QuickBooks, but it can be extremely helpful if you have more than one project for a customer. In this chapter, you will examine QuickBooks lists, activities, and reports that allow you to deal with customers effectively. By the end of this chapter, you will be able to identify customer center features and create new customers and jobs. Create service and non-inventory items. Create invoices and sales receipts. Receipt payments on invoices. Correct errors in customer transactions. Create customer-related reports. So, let's get started. Now that Jimmy's company file has been created, the next step is for you to set up the company to track customers. You will begin by working with the customers and jobs list, which is accessed through the Customer Center. Next, services need to be added to the item list so that sales transactions, such as invoices and sales receipts, can be entered. Information in the item list allows you to tie the service that is offered to an income account. Finally, you will create reports that will tell the story about customer-related transactions. The Customer Center. The Customer Center is where you will set up all aspects of doing business with each customer. This includes payment terms, sales tax, credit card information, and tracking the customer type. In addition, you can track the sales representative who made the sale, if appropriate. Selecting a customer from the Customer Center will give you access to a lot of information on that customer. The more information you enter for each customer, the more flexibility you will have later when you customize and run reports. If you use all the fields, you can sort, group, and filter your reports using those fields. Managing the customers' jobs list. Customers must be entered into the customers and jobs list, which is integrated into the Customer Center before creating an invoice. In QuickBooks, jobs provide you with a way to separate individual projects, events, or other distinguishing characteristics for a customer. An excellent way of organizing multiple jobs for a customer is to create each job separately under that customer. When an invoice is created, you then apply it to the specific job, making it easy to track job costs. A new customer or job can be added at any time, and the Quick Add feature allows you to add a customer right from an invoice or sales receipt. If you quick add just a name, you can go back later to edit the customer record, adding all the pertinent information. Many times, you will have repeat customers. In some cases, you may want to set up different jobs if there will be many projects, or trips in the case of a resort, for that customer. An example is a customer who requests an estimate on an entirely new vacation package that includes lodging, excursions, dining, and more. In this case, creating a job for the customer would allow you to track the job separately and enable job costing for analyzing costs per job, providing a more accurate picture of your profit and loss reports. Creating a new customer. The more information you enter for each customer, the better your reports will be. For example, if you track how you acquired the customer, referral, website, or print ad, you can pull a report by this field to determine how most of your customers find you. This could be a potential money saver if you see that the print ads give you a low customer acquisition rate. Perhaps you'd stop doing print ads. You can also set defaults for specific information for each customer, such as the sales tax rate and preferred method of payment. To have your customer list display in alphabetic order by last name, you have to type entries as last name, first name in the customer name field when there is an individual rather than a company as a customer. Edit an existing customer. You can edit a customer record at any time. However, any changes made to a customer record will be reflected in future and past transactions. To adjust an opening balance for a customer, right-click the customer name or job and choose Use Register. The change will be reflected in future and past transactions. Delete or make a customer inactive. On occasion, it's appropriate to delete a customer. An example would be a customer for whom you did an estimate and more than 6 months have passed with no order. You can delete a customer or job from the customers and jobs list as long as you have not used that customer or job in a transaction. You can make the customer or job inactive if you have, but you cannot delete it until after you close the books for a period and clean up your company's data. Add a job for a customer. It's not always necessary to create jobs for customers. An example is a resort that creates a separate job for each visit by a return customer. In a case like this, you can create multiple jobs under the customer to track each job individually and provide this information to the customer. The QuickBooks Lead Center. The QuickBooks Lead Center provides you with a tool to track potential sales leads. Within the Lead Center, you can create tasks, track them, input contact and location information, and keep notes. This feature helps you manage potential customers and allows you to easily convert a lead into a customer once you have landed its or their business. The to-do list. QuickBooks allows you to track all your tasks or to-dos in one place, the to-do list. You can enter and view items on this list from the various centers or the to-do list window itself. You can even run the to-do notes report to display all your tasks. If you wish to view a list of to-dos every time you open QuickBooks, you can set a preference. The item list. As you saw from your work with the customers and jobs list, chart of accounts, and others, lists are the way QuickBooks stores the data necessary for many of the behind-the-scenes activities to occur. For example, some lists store the services and products you sell, accepted payment methods, price levels, sales tax, and even the messages that appear on a customer's invoice. You might say that lists are the backbone of QuickBooks. Accessing and managing these lists will differ slightly depending on whether the list is integrated into a QuickBooks Center, customers and jobs, vendors, and employees, or is accessible via the Lists menu. Creating items. Before you can create an invoice, the services or products you sell must be entered into the item list. Although there are other types of items, we will cover how to create items for service and non-inventory parts in this section. An item is defined in QuickBooks as something a company buys, sells, or resells in the course of business. Keep in mind that it can't be bought or sold through an invoice or bill if an item is not in the item list. When creating an item, you will select the income account to which it should be assigned. Then, when an invoice is created with that item selected, it will automatically affect the proper income account. Service items. Service items are used in QuickBooks to track services that you both sell to customers and purchase from vendors. Service items can also be used on timesheets and paychecks to track time. Jimmy's accountant likes to organize items based on broad categories, so he's helped him set up the item list service items. There's more than one right way to set up an item list. Choose the one that makes the most sense for your business and you. Non-inventory items. Non-inventory part items are things that a business buys, but doesn't stock as inventory. Some companies will use purchase orders to obtain non-inventory items to track items used in their businesses, but not resold to customers, such as paper and printer ink. You can also purchase non-inventory items through the Enter Bills window by using the Items tab. Items both purchased and sold. To track both purchase and sales information for an item, you need to identify that the item is used in assemblies, purchased for a specific customer, job, or performed by a subcontractor or partner in the New or Edit Item window. While inventory items are the most common type to fall into this category, they can also be used for service and non-inventory items. For example, service items may be set up for both purchase and sale of the work is done by subcontractors. Non-inventory items may be set up this way if items are drop-shipped from a supplier and never physically stored in inventory. Sub-items. To track your items in a more detailed fashion, you can use sub-items. They can be created for any item on your item list and can be helpful on reports to determine aspects of your business, such as profitability. You might use sub-items in your company file to differentiate between broad categories of products and services and individual items within them. Manage pricing levels for volume discounts. Differentiate between measurements. Track multiple vendors for an item. When using sub-items, you state an item with no price for the main item, and then list prices for the sub-items beneath it or leave them blank to apply pricing directly on sales forms. You will work with sub-items in the Reinforce Your Skills exercise. Creating invoices. Once you've set up your initial customers and jobs list and the item list, you can begin entering sales transactions. In this section, you will learn to create invoices, which use accounts receivable, the account debited when invoices are created. When you create an invoice, you must specify a customer because the transaction will debit accounts receivable, along with the customer's sub-register. Invoicing a customer is also known as a customer making a purchase on account. After selecting your customer from the drop-down list at the top of the form, all the relevant information you entered in that customer's record will fill into the appropriate fields on the Create Invoices window. Even though the description fills in from the item list, you can always change it on individual invoices. When you type a new entry into a field that draws from a list, QuickBooks allows you to add the record to the list. You can choose to quick add the new record. The name will be entered into the list without accompanying information, which you can add at a later date, or to complete a full setup, a new customer window appears in which you can type all of the relevant information. When you first install QuickBooks, Intuit provides you with various templates, such as the Intuit Service Invoice, Intuit Product Invoice, and Intuit Professional Invoice. You can use these templates as they are, create custom templates to meet your specific needs, or download templates from the QuickBooks website. In this section, you will work with one of the default templates, the Intuit Service Invoice. Payment terms. Payment terms dictate an agreement between buyer and seller regarding when and how much is to be paid for a product or service. For example, in the case of net 30 payment terms, the invoice's net, or entire, amount is due in 30 days. By default, if payment terms are not stated for a customer or on an invoice, QuickBooks will set the payment due date to be 10 days from the date of sale. Invoice Status Tracker. One of the most helpful recent features in QuickBooks Desktop, in my humble opinion, is the ability to track the status of your invoices right from the Create Invoices window. In addition, you can click the See History link to the right of the invoice to open a window that shows the invoice's history. The dates that are tracked with this feature are: date created, due date and past due status, if it has been emailed and whether the recipient has viewed it, the date payment was received, the date the funds were deposited in your account. Receiving payments. After creating an invoice and receiving the payment, entering that payment through the Receive Payments window is the next step. Using the Receive Payments window will credit accounts receivable and the appropriate customer sub-register. The other half of the equation, the account to be debited, depends on how you treat the payments received. The payment method list keeps track of the different methods of receiving payments. You can also add additional methods such as gift cards. The undeposited funds account. By default, when you receive payments on invoices or from cash sales, the funds are grouped into the undeposited funds asset account. QuickBooks automatically creates this other current asset account. It's a cash and cash equivalent account. As long as you don't change the default payments received through the Receive Payments and Make Deposits windows will be directed to the undeposited funds account behind the scenes. Use the Receive Payments window. If you don't, the invoices will remain open, and your income and amount in accounts receivable will be overstated. After you receive payments, there will be a number notification on the Record Deposits task icon. This is a reminder to deposit the payments in the bank, moving them out of undeposited funds. The Income Tracker gives you an at-a-glance picture of customer activity. Use this tool to help manage your incoming cash flow. Sales receipts. When a customer pays at the time of sale, and there's no need to create an invoice, you can generate a sales receipt for the customer. A sales receipt does not affect accounts receivable, but will still affect undeposited funds. Selecting the correct form for customer sales. There are three main ways of recording customer sales and charges. Choosing the appropriate form depends on the circumstances. Invoices. Use this when a customer doesn't make a payment at the time of service and/or receipt of product. The invoice amount is held in accounts receivable. Sales receipts. Use this when a customer makes a payment at the time of service and/or receipt of product. Accounts receivable is not affected. This form is a combination of the Create Invoices and Receive Payments windows. Statements. If you have a customer for whom you do multiple jobs throughout the month, you can gather the charges and send one statement for all of them. The statement will show previous account balances, new charges, and payments for a specific time period. Depositing payments. After you've received payments for both sales on account and cash sales, you will need to deposit them. We will not go through this activity in this chapter, but be aware that the next step is to empty undeposited funds and move the amount to a bank account. Adjusting customer transactions. You will inevitably need to deal with errors or modifications to transactions. It is crucial to do this properly to ensure that everything behind the scenes is correct. Editing existing transactions. To edit an existing transaction, you simply open the window where the transaction is recorded and make the changes. You do need to think about the implications of any modifications you make, though. This is because many transactions are tied to others, and a change to one can affect another. For instance, if an invoice has been paid, both the invoice and the payment are linked in QuickBooks. After a transaction has been cleared during the reconciliation process, it should not be changed. However, because each situation may require a different solution, you may want to check with an accountant. Voiding versus deleting transactions. QuickBooks allows you to either void or delete a transaction you no longer need to be recorded. In most cases, you will want to void a transaction so you can keep a record of it. This will remove everything from behind the scenes and yet leave evidence that the transaction existed. Locating transactions in QuickBooks. QuickBooks provides two methods for locating transactions in your company file: Find and Search. The Find feature. The Find feature helps you locate a transaction if you don't know all the information about it from within the form itself. There are two options within Find. Simple to perform basic searches. Advanced to perform more complex searches, using filters to help to sort through your data. The Search feature. Search is more powerful than Find. Accessed above the icon bar or through the menu bar, it allows you to search the entire company file for the following types of information: forms/transactions, invoices, estimates, etc. People and companies, customers, vendors, employees, and other names. List entries, items, tax items, etc. Amounts and dates. Menu commands. QuickBooks opens the menu and highlights the command for you. Specific text within notes, descriptions, memos, and transactions. Fixing errors. Many errors are simple to fix, such as correcting the number of items sold on an invoice as long as the payment has not been received. However, once you add an additional transaction, addressing the error is more complicated. The following table outlines a common customer-related error, the effect of the error behind the scenes, and how to correct it. Customer-related reports. Once you've entered transactions affecting your customers, it's time to run reports to display and analyze your data. Types of reports. While there are many preset reports in QuickBooks and thousands of contributed ones, there are three main types of reports into which they are classified. They are: list reports, summary reports that subtotal data and provide a summary, transaction reports that show each transaction that makes up the subtotal in a summary report. To see reports based on customer transactions, there are different reports you can run depending on the specific information you are seeking. For example, the customer balance reports, both summary and detail, found in the customers and receivables category, show only the open transactions affecting accounts receivable, transactions entered and paid as invoices. On the other hand, the income by customer reports, both summary and detail, found in the company and financial category, show all customer transactions that have resulted in income for the company, not just those affecting accounts receivable. A quick report can be run from the various center and list windows. Quick reports show all transactions recorded in QuickBooks for a particular center list entry or account. For example, you will use this report to get a quick snapshot of all customer transactions for Brandon Bates. Quick Zoom. QuickBooks has a great feature called Quick Zoom. It allows you to drill down or zoom through underlying subreports until you reach the form where the data was initially entered. This can be extremely useful if you have questions about where a figure in a report comes from. You can even edit the source transaction once you have navigated to it. Sales reports. Running sales reports will help you to stay on top of your company's revenue. Sales reports can be grouped by customer, item, or sales rep if set up. You can also view sales information by job if you have jobs set up for your company. To see all sales for the company, you will want to view the sales by item report. Basic report modifications. You will often run a report, and the columns are so narrow that you can't see all your data. Or, you may have columns displayed that you don't wish to view. These dilemmas are easily solved without traveling deep into the jungle of the Modify Report window. In fact, you can adjust them in the regular report window. To change the width of columns, simply drag the little dashed line dividing the column headers when you see the double arrow, similar to how you adjust column width in Microsoft Excel. To eliminate a column, drag one side of a column divider across the entire column and across the divider on the other side. Not all columns can be deleted, however. When you try to delete a column that must remain, it will simply be resized instead. That's all for today. Your next step is to review this chapter and get the exercises started. Thank you for participating in today's lesson. I will see you in our next session. And remember, if you don't know, askmarcio.com.